Now with Chantal Marx from FNB Wealth and Investments. A very good evening to you, Chantal, and as always, thank you for joining us. Let's start with the way that the JSE started off the week. It's not as mixed as we saw with its global peers, and of course, the big global story that market participants are still looking quite closely at is the uncertainty around what's happening in the Middle East. What would you say were some of the other big contributors today?
So I think it was just investors becoming a little bit calmer around what's happening in the Middle East, and perhaps the risk of it escalating to a regional conflict declining somewhat for now. We heard news today that the US president is planning a visit to the region, as well as the German chancellor. So the expectation is that they will enter that region and perhaps calm the situation down a little bit, because what you don't want is a regional conflict that escalates outside of the area where it is currently centered, and for other parties to get involved. And that has particular implication for the Brent crude oil price, of course. For now, you don't have a scenario where oil supply is too compromised, but should you see a spread of that conflict, it could become a huge problem.
Yeah, and I want us to maybe speak about that huge problem when it comes to the price of oil, Chantal, because we're back almost at around $90 a barrel, and the risks of us going all the way back up to about $100 a barrel are very real, aren't they?
Yes, absolutely. I think if you have a scenario where OPEC Plus is really closing the taps in order to support the oil price, and you have the prospect of demand probably remaining soft for the next 6 months. So they are playing a balancing game, because obviously for them, high oil prices are more favorable. And if the demand outlook doesn't look great, then they are going to tighten up on supply. I think the real issue is going to come once the demand outlook starts improving, and whether or not OPEC will be able to adjust their output quickly and accordingly, or whether or not it's rather in their interest to keep the oil market extremely tight and to push up prices even further. My thinking is that we should see a little bit of a softening as economic growth continues to slow, and hopefully we get to a situation where OPEC responds quite quickly. Oil prices are quite elevated. I think they are looking at kind of supernormal profits for the big oil companies on the back of this, and obviously something has to give.
Something has to give indeed. Let's get on to some company updates. So last week, Friday, Christo Wiese made news for selling almost about R1 billion worth of Shoprite shares, engaging reporters. He said nothing's untoward here. It's just part of a restructuring of his portfolio. Your thoughts on a sale that big? Is it common? And if not, what would you say people are talking about in the corridors about some of the reasons perhaps?
So it really isn't common, but then again, it isn't very common for one individual to own 10% of a massive company like Shoprite. I think the reasons that he provided are very credible. Portfolio rebalancing. Obviously, he is extremely exposed to Shoprite. The Shoprite share price has done quite well, so I think it's probably a good time for him to make that move. But I wouldn't read anything more sinister into it than simply him taking an opportunity to bring a little bit more balance to his portfolio. Certainly, that's the way that we've assessed it. I think the only thing that we can say is that the Shoprite share price is probably a little bit toppish at the moment, and this is why the timing is as it is.
Yeah, and then Calgro M3 releasing their interim results. I mean, they're doing very well. So they are the provider of low-cost or affordable housing developments and the like. What did you make of what they had to release and the positive contributors like advertising and the like?
Yes, it was a super solid result from Calgro. We've seen them building up really nice momentum in that residential development space, and this is despite the fact that interest rates have been quite elevated, and obviously from an affordability perspective, things are looking a little bit precarious for the consumer. But I think that the space in which they operate, which is kind of mid and low income housing, is really an area where there's a massive short supply of decent housing. And Calgro has stepped in, and they're providing just that. I mean, they're probably a step down from what you would expect from the likes of a Baldwin development. But a Baldwin development is now getting pretty expensive, even for 1 and 2 bedroom houses. So I think that the areas in which they are constructing their developments and the price ranges that they offer has broad market appeal. And I'm actually quite excited for them once this interest rate cycle starts turning in South Africa. I think that they could benefit quite substantially from that.
And their developments don't look half bad at all, Chantal. I must be honest, I did some looking around and they don't look bad at all. Something that doesn't look too great and might look a little bit bad is Cashbuild, their quarterly operational update. Really just kind of saying the same thing that they have over the last few months or so, is that the trading environment has become extremely difficult as consumers are not demanding what it is that they're selling as much as they did perhaps 3 years ago.
Yes, it's been a very tough time for the hardware retailers, and you can see that coming through in the Stats SA data as well. And that really is a function of the economic pressure that's being felt right now. There isn't really impetus into small scale or DIY kind of projects. I think that the residential and small commercial housing market or building market is probably under quite a bit of pressure. People perhaps sitting on what little they have left of their savings, and where we are in the interest rate cycle, it doesn't make sense to push for kind of large developments relative to a kind of a smaller property that you're perhaps working on, or smaller projects that you are working on. What I would say, though, is it does seem as if downward momentum has halted. So the pace of the sales declines that we're seeing has started slowing down. And I think, again, this is one of those companies that once the cycle starts turning, could be a key beneficiary of, let's say, easier economic conditions.
Let's hope those easier economic conditions come sooner rather than later, Chantal. As always, thank you very much for your time this evening. That is Chantal Marx with a wrap of the day that was on the JSE, of course, looking at both local and global factors.